You're supposed to put the first 500 in the safe and lose the combination.
Hey yo everyone, it's your boy Kev. I might drop a little something for y'all niggas to know that we can. Nah, I'm not gonna rap, but I'm gonna show you guys something very important when it comes to trading. I just want to share this basic principle, a basic tip that is actually gonna change the way you view the markets, and that is actually gonna help you in analyzing your charts and when to actually look for trades and when not to look for trades. So I'm going to be showing you guys the most important signal, the fundamental signal, and actually showing you whether the market is breaking a trend line or not. I know it's actually hard determining whether the market has really broken your trend line or not, because in most cases you would find that we have a channel like this and the market is actually playing in our channel like this, and what it does is that sometimes it does this and you think that this is actually a breakout, but the market actually comes back into a trend line. It does this again and it just keeps doing that. It does this and it continues pushing down and down and down. So for most people, I know that this can be very confusing, because I know that a lot of traders might have placed their trades right here. A lot of people might have actually placed their trades right here, thinking that the market is actually gonna push up, just because they see these little breakouts and think that they can actually start buying. So they place their buys right here thinking that the market is going to push up. But what actually ends up happening is that the market pushes down into the trend line, goes out again, and it just keeps doing that and that. So it is for this reason that I actually want to show you guys this important principle that you should apply when looking for proper breakouts and potential breaks of trends. The one thing that you guys have to keep in mind is that you shouldn't look for these breaks on smaller time frames. So you shouldn't hop onto an hour chart and start drawing your trend line and waiting for the market to actually break those trend lines, because what's going to happen is that you're going to draw your trend line. Let me just draw something like this and show you what's happening right here. So you can clearly see that the market has actually been touching multiple times, but after that, the market actually broke out. It gave us this fake retest right here. Like I said, a lot of people would actually enter long positions right here, thinking that the market is actually going to push up. But what happens is that the market actually goes back into the trend line, retest, pushes down, goes out again, and then it just keeps doing that and that. After a while, you're going to realize that the market actually just continued pushing lower. So all this was just a downtrend like this. So I want to show you guys how to avoid doing this. The very first thing that you want to do is that you shouldn't look for these breakouts on smaller time frames, meaning that you shouldn't just hop onto the market, start on an hour chart, and start looking for breakouts. You should start on a bigger time frame. And the reason why you want to start on a bigger time frame is because when we have a channel like this on a bigger time frame and the market is actually pushing lower in a very strong downtrend, and all of a sudden you see a candle that actually breaks out of that trend line. So let's say that this is actually the weekly chart and the market actually breaks out of that trend line with a big bullish candle. This is a very valid signal for you to actually start looking for buys. And the reason why I'm saying this is because if we were to hop onto a smaller time frame, remember this is a weekly chart, so meaning that one candle actually represents movements that take a week. So when we hop onto a smaller time frame, this candle is not just going to be a small candle, it's actually going to be a week worth of movement, so 7 days worth of movement. So if we were to switch to a daily chart, we're going to realize that we're going to see 5 candles that actually broke out of our trend line. So it is for this reason that I tell you guys that a weekly signal, a weekly candle that actually breaks out of a trend line is a better signal for a break of a trend line, in contrast to a smaller time frame like our hour chart. And our candle does not give us a solid signal that the market is actually going to start pushing up, but a weekly candle actually gives us a very strong signal, especially if it impulsively breaks out of our trend line. It is a very strong signal that the market could actually be trying to start pushing to the upside. If we were to switch this to a 4-hour chart, you're going to realize that it's not just going to be a small candle. It's going to be a very strong movement that actually broke out of a strong downtrend. So that's when you can actually start looking for your buys, because we have this strong break out of our trend line. So let's look at a real chart to actually show you guys what I'm saying. As I mentioned, that you actually want to avoid these breakouts on smaller time frames, but you want to go to a weekly chart. And when you go on a weekly chart and you actually draw your trend line, and you see that the market is actually breaking out of that trend line with a very strong weekly candle. So if we were to actually draw our trend line like this, you can clearly see that we had multiple touches right here. The market has been touching multiple times. So meaning that this was a very strong resistance level. Every time when the market actually came to this level, it reversed and started pushing to the downside. So it was pushing up and the market would actually just start pushing lower. But check what actually happened right here. When we zoom, we see that we actually had a breakout and it was a green candle. But if we were to switch to a 4-hour chart, we're actually going to realize that this is a very big move. So on a smaller time frame, this would actually look something like this. And our trend line would be running like that. So this gives us the idea that the market could actually be trying to continue pushing up, and we're going to start preparing our buys to push with the market to the upside, because we have a weekly candle that actually broke out of our trend line. It broke out of our trend line and closed outside of our trend line. That's another important thing. You have to make sure that the candle actually closes outside of your trend line. The reason why you don't want to trade a candle that is actually still running is because it can be very risky. So if we are dealing with a channel on a weekly chart where the market is actually pushing to the downside and giving us movements like this, and all of a sudden you see a candle that is actually running. This candle has not closed yet. It's actually still running, meaning that it can go anywhere. It wouldn't be advisable for you to just take a buy just by seeing that the weekly candle is actually pushing outside of your trend line. So when you see a weekly candle that is actually running outside of your trend line, that is not an entry signal. And the reason why that is not a valid signal is because the candle is actually still running. When a candle is still running, it means that it can do anything. It hasn't closed yet, especially if the candle is, let's say maybe it's on a Thursday, meaning that the candle has not closed yet. The candle only closes on a Friday, late Friday. So you have to wait for the candle to actually close, because as long as the candle is still running, anything could happen. This at the end of the week can actually turn into a wick, and the candle can close lower inside your trend line. So you would actually think that the candle is trying to push outside of the trend line, but later during the week, you would realize that the candle actually closed inside your trend line and price continued pushing lower. So you want to wait for the market to actually close outside of your trend line. So when price actually closes outside of your trend line, it means that there are higher chances that the market, or the next candle rather, is going to form outside of your trend line and continue pushing with the market. So if the candle was to close outside of our trend line, so if we were to see something like this outside of our trend line, there are higher chances that the next weekly candle is actually going to open outside of our trend line and continue pushing outside of our trend line. So that's why you would actually want to wait for the candle to close outside, switch to a smaller time frame, and start looking for your buy setups and start pushing with the market to the upside. So just a quick summary on what I was actually saying. You want to draw your trend line on a weekly chart. So you're going to draw your trend line on a weekly chart where the market has been making solid touches, either pushing to the downside or pushing to the upside. And when you see that a weekly candle is actually breaking outside of that trend line and closes outside of that trend line, there are very high chances that the market could actually continue pushing up, or the next candle could actually form outside of our trend line. What we see right here is that we see a green candle that actually broke out of our trend line and it actually closed outside of our trend line. So that actually meant that the next candle could potentially also form outside of our trend line and continue pushing with the market to the upside. Let me just give you another example. So say that we were actually looking at this tiny uptrend right here, and all of a sudden we see this red candle that is actually breaking our little trend line right here. When this candle actually broke our trend line and closed outside of our trend line, there were very high chances that the next candle is also going to form outside of our trend line and continue pushing lower out of our trend line. But if it happened that this candle did not close, there were very high chances that this could actually be a wick and the market could push up. So you had to wait for the market to actually close, and after closing, that's when you would actually look for your corrective move and start pushing with the market to the downside. Let's take a look at what happened right here. You can clearly see that we had a couple of touches right here. We had a solid touch right here, and we had another touch. We had another touch right here, and we had this third touch right here. So if you were actually waiting for confirmation that the market is going to push up, you would draw your trend line like this and wait for the market to actually break outside of our trend line. So we can clearly see that when we zoom, the market actually, this candle broke outside of our trend line. It broke outside of our trend line and actually closed outside of our trend line. So that meant that the next candle could potentially also form outside of our trend line and continue pushing with the market to the upside. So after this close of a candle, we would switch to a smaller time frame, because now we know that there's a chance that the market could actually continue pushing to the upside. You could switch to your 4-hour chart and start looking for your setups to push with the market to the upside. The market actually closed outside of our trend line, and when you hop onto a 4-hour chart, that's when the market would give you more detail as to what is actually going on. We see that we had impulsive move to the downside, an impulse, a correction, impulse, correction, impulse. And when price actually came for another corrective move right here, that's when you would actually start taking your buy to push with the market to the upside. Price also gave us a triple touch right here. You can clearly see that it gave us a touch right here. That was one, second touch, and this was the third touch. And that's when you would actually start preparing your buy to push to the upside, because from a bigger perspective, from a bigger time frame, we saw that a weekly candle actually broke outside of our trend line, and it also closed outside of our trend line, and that was a valid signal for us to actually buy with the market to push to the upside. That is a more valid signal as opposed to actually just drawing your trend line on a smaller time frame and hoping that the market is actually going to go up. When I draw my trend line on a 4-hour chart, I'm going to show you guys how that could have actually misled me in many ways. If I were to draw my trend line, say like this, if I were to draw my trend line like this and say that, but yo, look, we have multiple touches right here. We have a touch right here and we have another touch right here. So when price actually broke out of this trend line right here, that could have served as our interest signal to actually push to the upside. But let's see what happened right there. If you were to place your long position right here, you would obviously aim for this high right here. The market actually came down, hit your stop loss, and just continued pushing to the downside. Why? Because you used a signal that was coming from a small time frame. A small time frame does not serve a good signal that the market is going to push to the upside, because this is actually a tiny move. This break is not a big move. This is not a strong push outside of our trend line. But if I was to draw our trend line from a bigger time frame, like our weekly chart, and wait for a weekly candle to break outside of that trend line, that is actually a very strong confirmation that the market could be trying to push to the upside, because that overall movement is big in comparison to what could be happening on a smaller H4 candle that is actually breaking outside of our trend line. A bigger weekly candle is a very strong signal that the market could be pushing to the upside, because it's a very strong impulsive move outside of our trend line. I hope you guys actually gained a thing or two from this video. If you did, man, do make sure that you like this video, subscribe, and you can also leave a comment if you want to ask any question about this specific strategy and how to actually apply it, what time frames to look at. And if it happens that maybe you're confused at something, I'm more than happy to answer your questions. Peace.
You're supposed to put the first 500 in the safe and lose the combination.